So this week, we have the Dow near the top of its channel, with hopes of the Chinese trade war with the US coming to at least a first leg of conclusion, and Fed doing QE, first time in many, many years. Up to now, the Fed has been calling the tune, because QT has been pulling money out of the global economy, and that's had knock-on effects. Now, what's happened is that QT went on for too long, and there's now a money supply problem, which is why the Fed has had to pump money back into the economy to keep the banking system afloat. They've done that job, but if they hadn't, all hell would have broken loose. But the Fed is on it, and it's now pumping money into the economy, and that's going to be good for stocks. The end of the trade war with China will be good with stocks, but of course, it's a long way from being sorted. So you have a updraft from Fed QE, you have a little bit of an updraft from the prospect of the end of the China-US trade war. And you've got a resistance from the fact it's right at the top of its channel. We have the Dow, strongish. It looks like it could correct back down to the bottom of its long-term channel. If it was to break through, that would be very major indeed. I don't think it's going to do that. I think we're going to be in this channel for some time. Because I think what happens is China wants a deal because obviously its economy is in trouble. Its GDP growth is at the lowest levels for a long time. And also, if it's going to sort out Hong Kong, it can't be having a trade war with the US and go and try to get Hong Kong back into line. So it has to sort out the trade war before it does that. The US is also in a similar situation. It doesn't want to have a trade war because it wants to go and kick Iran. And it can't be in a trade war with China and go and kick Iran. So both China and America want to sort out the trade war for economic reasons, but also for geopolitical reasons. But at the moment, we're in this long-term sideways channel, which is pretty narrow. If we correct down to the bottom of that, it's no big deal. And if we go to the top of it and stick around there, it's no big deal. The only big deal really on the cards right now is that the Dow would break through. Now that leads us on to Bitcoin, because Bitcoin is the reverse side of this situation. Equities down, Bitcoin up. Bitcoin up, equities down. Now Bitcoin is well down from its high of 14,000. It's now oscillating around 8,000. And it's zipping up and down there. It's almost as if, when there's a situation where the Chinese talks aren't going so well, there's a little bit of a pop for Bitcoin. When things are going well, it slumps down. Now, I think Bitcoin is probably going to go to 6,000. It's not a happy situation, but for long-term Bitcoin people, this is an opportunity just to buy. Very soon, in next year, there's going to be a halvening of the new Bitcoin issuance, the mining reward, and that is going to have an upward pressure on Bitcoin prices. And that's coming. So a lot of people will think this is the last chance saloon to get cheap Bitcoin. That, of course, is wishful thinking. I hope that's right. I believe that to be a strong possibility. And of course, gold is also languishing, not as much as Bitcoin, but nonetheless languishing, because Bitcoin is the new gold. It goes up further, it comes down faster than gold, but basically they kind of track because of the same thing. Bitcoin and gold are a flight to safety. So at the moment, equities are looking quite bullish, with the possibility of a really strong run. Now, they could correct back because the China trade war could go south again, but the chances are that the trade war is going to be coming to some sort of slow rolling conclusion, and that is going to be bullish for equities. And you've got QE going on for 6 months. So you've got the completion of the trade war, you've got QE all pushing up on equities. That should be weak for Bitcoin. But it won't be long before the halvening comes along, and that'll be strong for Bitcoin. Now, back in Europe, Brexit continues to be a complete nightmare for the EU and for the UK. Although the markets there are saying that there's going to be a good resolution for Brexit, and that's going to be either a soft Brexit or no Brexit at all. And it's still anybody's guess which that will be. But overall, the markets are saying that Brexit is going to go right. That could mean no Brexit at all. And if no Brexit at all occurs, or dead Brexit as I call it, then the UK market will absolutely go through the roof. A soft Brexit, the UK market will go up quite a lot. The UK market is massively underperforming, and one day that situation is going to change and it's going to rally very strongly. Maybe that's soon with no Brexit, maybe that's some time off. But the UK market is very cheap and things don't stay cheap for long.